Hello everyone. Today I'm going to present about our group project data presentation, which is about the relationship between net working capital and financial performance from consumer products and services sector in Malaysia. Before presenting, let me introduce on my group members who are Britney Maria, Esther Ting, Mctricia Fiorentina, Mohamad Shahidan, and myself Ubeintiraa Subramaniam. So let's get into the data presentation. First is about the descriptive analysis. The average value of the return on asset ROA and the return on equity ROE are 5.74% and 6.61% respectively. This finding shows that the consumer products and sectors in Malaysia is cost effective in generating more profit from their operations by utilizing their total assets. Furthermore, the return on equity is considered to be relatively moderate. The maximum value for ROA and ROE are 47.2% and 147.79% respectively. This indicates that the consumer product and services sector in Malaysia showed a higher ROE with maximum value of 147.79. Next is about the Pearson correlation. Pearson correlation test is conducted to examine the relationship between the variables. The ordinary correlation analysis tells us that the return on asset, return on equity, net working capital, firm size, leverage, and sales growth have a positive correlation to one another. There is weak positive correlation between return on equity and net working capital. It indicates that when both variables tend to go up in response to one another, the relationship is not very strong. Meanwhile, net working capital has a negative correlation with firm size, leverage, and sales growth. A strong negative correlation will indicate a strong connection between the two variables, but that one goes up whenever the others go down. So let's see about the multi-correlatory test. A variance inflecting factor VIF is presented in the table to support this. The centered VIF value is low for all variables that produce a lower VIF in the range of 1.008 to 1.43, showing that there is no issue with multi-collinearity as the VIF value is less than 10.
I will present the result of the fixed effect model. The regression was estimated using the fixed effect model, which resembled the Pearl regression model, since the result of the Houseman test p-value of the random effect model is less than 0.05. Hence, fixed effect model is more appropriate. Using Durbin-Watson statistics, the result demonstrates the non-appearance of autocorrelation in the data. Model 1 result indicates a negative relation between net working capital and leverage. The variables in the ROA model are statistically significant at a 5% significance level, except for firm size, which is statistically insignificant. Model 2 result indicates net working capital and leverage are statistically not significant in measuring the effect on the consumer product and services sector financial performance using ROE as a proxy, although net working capital has a positive correlation. Moving on to conclusions, to further investigate the relationship between net working capital and the profitability proxies, the researcher used a linear model which the result confirmed the researcher's earlier result. More specifically, when net working capital sample was used, a significant negative effect of net working capital on ROA was present. One perceptible finding using ROA as a researcher profitability measure is that the coefficients magnitudes of net working capital negative with ROA. This evidence suggests that net working capital enhanced corporate profit significantly faster for the negative net working capital than it worsened profits for the positive net working capital. When using the ROA model, however, a not significant positive relationship was evident between net working capital and ROE, implying a linear rather than non-linear relationship. Hong et al. 2011 looked at the relationship between working capital and profitability in Brazil in this regard. According to their research, when using ROE as a measure of profitability, working capital has no statistical support. As a result, compared to ROA, ROE may not be a strong indicator of the financial performance of the consumer product and services sector. It is viewed as a measure of the company's return to shareholders and does not have a direct influence on the business financial operations. Lastly is limitations and recommendations. The research is just 6 years long, from 2015 until 2020, which is a short period of time, and the sample size is small, only 150 companies. To acquire more robust findings, future study should use extended time series data and a large sample size. Although the study sample is based on Bursa Malaysia industry categorization requirements, the consumer product and services sector inevitably comprises multiple subsectors with varying working capital management practices which might influence the result. This research solely looked at current assets and current liabilities as working capital components. Other aspects of working capital such as marketable securities, the net trade cycle, and other external variables might well be studied for their impact on a firm's profitability. While examining working capital management, future research should look into behavioral characteristics, qualitative investigations, survey studies, and systematic conceptual frameworks. To fulfill the shareholders' wealth maximization goal, more attention should be given to analyzing the effect of working capital on a firm value and share market prices. That's all from us. Thank you.